Tom Farley's going to join us in the next hour. He thinks the Lyft IPO was perfect in how it was pulled off in terms of
maximizing proceeds.
Yeah,
yes,
and
they nailed
also,
it. They got every penny they possibly could.
They got every penny they possibly could. How would you characterize the entire situation?
Exactly that. If you were trying to raise the most money you possibly could, then they nailed it. As far as the investors that bought the stock at 72 up to 87, anybody who bought it in the open market is underwater right now. And if you bought it at 72, you're wondering, like, okay, it's 77 and falling. Is it time for me to sell?
So they got as much as possible, but is that actually what you really want to do in a situation like that? Do you want to leave the people who actually bought on the opening bell feeling like they got burned?
There are different models to think about this. This sort of Facebook IPO is one example of this, where they maximized proceeds. The stock was underwater for a year, but the owners didn't care, right? It didn't matter. They wanted the money so that they could go compete because they were thinking long term as opposed to thinking about having the kind of market where people could buy and sell and be happy the whole way through.
And we are talking about just one day. I guess you have to wait and see what happens from
Anybody
here.
who held on to Facebook became exorbitantly wealthy.
That's true. They had a long hold time. So, I mean, I think what we would say is only one day. Like, we wish we were surprised at what was going on here with a 5.47 score. Like, it was only a matter of time before gravity was going to assert itself on this name. We thought they wouldn't let it go below 80 on the first day. The fact that they did tells us, like, okay, this is going to be a rough ride for a while. But we have Q1 coming and the Uber filing coming. So it's going to be a new day.
Derek Khosrowshahi, the CEO of Uber.
Yes.
Watching this,
thinking,
okay, how do we price our IPO? Do we want to be aggressive? Do we want to what's the lesson from this, or we're still too early to even know?
Well, you're probably a little too early. I think that look, these guys had some unforced errors. They could have given us some more numbers to go by to get a stronger conviction on the name as you're buying it. But I think Dara's happy to see, like, look, this deal got done at the high end of the range and probably could have got done over the high end of the range. So that means the market is there for him, which is the only thing that he really can't.
Let's say that 87 is the high water mark for a while.
Mm-hmm.
It was a successful IPO, but the people that need to be involved with the IPO are the retail investors.
Correct.
Are they happy that Lyft had a great IPO? Or, I mean, what does it mean for future IPOs? Do they say once burned?
Right. We think there are two models that you could look at here. One of them is a low-scoring IPO on our end, and one was a high-scoring IPO. Blue Apron is one example you could look at and say, like, okay, it got done well, raised a lot of money, and then was straight down and never back. The other example would be like an Etsy that had a rough ride on the way out of the door, but then recovered nicely and has been really good for retail investors. So if you're a retail stock, there are different examples you could look at.
Though to Joe's point, is anybody going to jump in as enthusiastically for Uber on the opening? Some of the retail investors, if they saw what happened at Lyft and figure, oh, I'm not getting in on some great bargain early on, and I'm just going to wait and see what happens.
Well, so the snarky answer could be Uber's going to raise $20 billion, so retail isn't going to do that for them. They need the institutions to put together that kind of capital.
Yeah, but everybody eventually needs retail investors to get involved with this in order to support things.
That's true. Although Uber will have a chance to stabilize, I think it'll be a very, very different story.
Talking about a different story, do you see these as, do you think investors sat around saying to themselves, okay, I'm either going to do Lyft or I'm going to be in Uber? Or do you see this completely differently?
One of the great
people are going to look at the Pinterest IPO and all of the other IPOs that are going to come before Uber gets there.
Well, I think what happened in the private market is investors were forced to choose. Like people that missed Uber because they didn't like it on price, like Andreessen Horowitz famously went to Lyft because, I didn't want to miss out on this ride-hailing thing because it's going to be a thing. And even up through, depending on what you believe in the newspapers, the selection of the underwriters, you had to pick. In the public market, you don't have to pick. You can own both, or you could own one and short the other. Right? That's the beauty of the liquid public market is all of these devil's bargains are no longer operative.
Who do you think gets shorted in that scenario? Which is the better of the two?
I mean, we hear rumors about the short books shaping up on Lyft now, right? That people don't like it at this price and they want to normalize
public
it.
A day, and they're already shaping up the short book.
I mean, it takes 3 or 4 days to get the borrow in place, but some people are planning ahead on this one.
Is there any event risk to these? I mean, over the weekend, one of the most tragic, horrible situations where someone called an Uber, the college, she's at the University of South Carolina, car shows up, she gets in, doesn't check who it is, and within 2 hours, she was dead. I mean, they try to prevent this, right?
Sure.
Is it possible to make sure that there's a zero chance of this happening?
I'm not that smart. That's a really, really hard one. I don't know what that does for sentiment for the stocks. I don't know what it does for the
Nobody's
actual
ever going to
operations
stop
of the company.
ride hailing.
To be clear, that guy was not a
he was not an
a
Uber
Lyft
driver.
or an Uber driver.
No, I know, but she had just
probably
called.
Assumed they think the working assumption is right now
but
that she thought it was her Uber.
If you were someone with ill intent, and there have been people like that, you can drive around and there are people waiting. All we got to do is pull up alongside, and they will.
I mean, this is one of the things that I think has been a real challenge for these companies, both, you know.
The drivers, hopefully they're not under the influence, they have smoked a big joint or something.
Sure.
You know, there just seems like so many things where, and this, with me, I have a college-age daughter, we all have kids, the kids
I talked to my daughters about it.
I'm
too.
One of the
scared
things
of
that
putting them into
where this
these
shows
cars.
up in the numbers is there's $2 a ride in insurance, right, in the Lyft filing. So this is obviously, it goes straight through to the cost of every single ride because they insure against things like this. Obviously, what happened is terrible.
care that they have
doesn't-
insurance.
Right, it doesn't make you feel any better.
No.
That's your daughter, but still,
I wonder how
it's an issue.
they got to
for the
figure out a
unit
way
economics.
where it's just absolutely clear that this is the person that you called. You know, just not
Right.
And they
That'll be
haven't done
interesting to
yet.
see
I mean,
how
I
that
think
plays
Most
out.
of the cars now are putting
Have
either,
it-
putting
right,
either
but
the
do people
U
do it or
the
just
Lyft.
get in?
What'd you say?
Do people look at the license plate
Well,
and
that's
say,
the question.
is your name so-and-so? Or
No, you have
They
to.
should say, the Uber guy should be required to say, hi, so-and-so. You
Well,
know,
they usually say.
They should have a card like a driver does when you hire a driver to come that says your name on it, or at least has their identification.
got to be a way to
number.
do this.
I mean, what
It's
I think
easy
is
to say.
interesting about it, just as far as the sort of consumer adoption, is drivers that aren't even Uber drivers or assumed to be Uber drivers.
Right.
That's how ubiquitous the service is.
Right.
Right.